Hey, how you doing? Hey, how you doing, huh? Just let everybody kind of roll in. We're scheduled to start in 5 minutes. While you're at it, check out the squawk. Free to you, free to use. Give it a like, huh? Give her a like. About 4 minutes, huh? 4 minutes. Guys excited? I think it's going to be a decent week, even though it looks slow in the calendar. Hope you had a nice weekend.
Let's hope Goldman Sachs is wrong.
Jumbo. Please swing on by the squawk. It's designed for you to run it in the background. I'm the one running the noise, not the squawk. You're worried about the music. It is pretty good jam though, eh? The squawk is very, very quiet by design. Morning, Jordan. High flying, death defying 360 slam dunk. It's the shoes. Well, it looks like it's time to go. Let me mark this as the beginning. Booyah! Happy Monday, everybody. Welcome to Forex.Today, the YouTube community of more than 50 million. All right, more like 21,000. That's pretty good, right? 21,000. You know, that's a lot of people, 21,000. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because, well, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So I built something for you. It's a present. And present meaning right now. You get it? The wordplay. It's a present. It focuses on the present. I created a new squawk service for you. Some organizations are charging $200, $300, and even $400 a month. Mine is free. I'm giving it to you for free. I love you. You're my sweet baby. Like your mama told you, you're special and unique. So, I made this for you. Real-time calendar, real-time headlines, read to you throughout the day, through the Asian session, through the European session, through the US session, and real-time charting. In this case, it's our technical pattern radar from traders.com. And of course, the ticker tape. I got to update to the ticker tape. It's supposed to have the relative change, the percentage change, and it's not doing that. And we'll get that. And then this thing is supposed to tell how many subs, but of course, it's not doing that. But everything else works. And it's cool. It's running right now. The idea is 24 hours a day, 7 days a week. It's really quiet. It doesn't make much noise, but it does read the headlines to you. So you can have this just, you open it up and you can just do that. And now while you're trading, you can hear the news read to you. And during the New York session, I'm the one reading to you. One of the people anyways. So that's for you. That's for free. It wasn't free for me to build, but you get the idea. So if you can swing on by, use it. Please use it. And then click the thumbs up button to tell YouTube this is awesome. I'd appreciate it. And of course, if you want, you can chit chat with other traders. Okay, that's good. You know everybody here. We're all friends. We're all family. I did something else for you as well. This is also free. And how to trade chart patterns. I made these little flashcards. The idea is you download them, you print them, you cut them out, and now you have flashcards. Fed slogan: gradual rate cuts on the cards if economy meets forecasts. All right, that sounded a lot like me, but you see what that was on our squawk. Fed slogan: gradual rate cuts on the cards if necessary, right? Or if economy meets. Okay, great. So that wasn't me, but it's kind of like me. reading the news to you, right? Papa Wayne reading the news to you. Papa Wayne, please read some more news. So anyways, going back to this, the idea is there's 20 patterns, and you can just go and ask yourself. What I would do is I would put one hand, okay? I'd put one hand over this section here, like how to trade it, right?
Gold pushes higher on increased safe haven demand as Middle East conflict intensifies.
I would hide this with one hand and then in my mind say, okay, how do I trade this pattern? And then check it and then flip. Okay? And you can go through the cards. Total muscle memory. This works really well for some people. It's not everyone's kind of bag. Not everybody studies this way, but I know many people do.
Kickstart the FX trading day for OCT21 WTEC, a technical look at the Euro US dollar, yen, and pound US dollar.
So anyways, so that is also for you because you're special and unique. You're my sweet baby. Papa will take care of you. Okay, cool, right? I mean, this is neat, right? I'm going to the other little hack is install an extension on your browser called Video Pop-Out. And now I can have the news running here as we go through the charts. Kind of neat, right? Yeah, very neat. All right, so anyways, cool. So my name is Wayne. You probably know me. We probably hang out a lot.
Mexican peso declines after Donald Trump edges ahead in polls.
So, look, you need to automate your technical and your fundamental analysis. Let me turn this up. Well, no, I'll leave it. I'll just move it over here. Fully automate your technical and fundamental analysis so you can make institutional quality decisions, even though you may be simply a retail Forex trader. Doesn't mean you have to make amateur decisions. You can make professional, institutional quality decisions if you have the data. Well, you now have the data. But then you're like, Wayne, you give me all this data and it's great, but I don't understand all the fundamentals. Okay, well, there's two ways to solve that, right? I can give you a training course. In fact, 100 hours worth of training. Okay, good. Solve that problem. Or I can also meet with you every single day and go over the fundamentals with you and explain it. I can also download the reports from the government agencies and read them line by line with you and explain them. Okay, well, we already do that. So that problem is solved. So it's like, if you know fundamentals are what drive the trends and the rest is just technical analysis. If you know the fundamentals drive the trends and you're like, you know they're important, but you don't have an economics background or 20 years of trading experience, that's no excuse anymore. That's just BS. Now, that problem's been solved. Traders.com solves it. Done. That problem's solved. Step up. Okay? So anyways, so I can do things very quickly and say, okay, well, we don't have an underlying intrinsic trend right now, so be careful, right? Now, the other side is, Wayne, I'm really good at technical analysis, but I tend to be too early or too late on all my trades. Yeah, it's because you're probably trying to do everything at once. And you can't watch 7,500 charts at one time. You probably have tried, but you can't. Well, a machine can. And so we employ a machine to watch 7,500 charts, and these patterns that are emerging. And once again, if you understand how to trade patterns, you realize these arrows don't necessarily mean buy, sell, buy, sell. I don't even understand you. We don't even speak the same language. You want somebody else to make a decision for you and your money. And I don't get that. It doesn't make sense to me. Doesn't compute. Syntax error. Spinning hourglass. So anyways, you still need to be able to take in the information and then make decisions, right? So anyways, this is very helpful because it does all your technical analysis for you. It doesn't do your trading for you, but you can go through and say, okay, USD Rand, okay, this looks like it'll be up in the next couple of days. Is that something favorable? Or you look at it and say, I think this is going to be down in the next couple of days. So you look at this chart and you're like, oh, that's down. Done. See? Easy. So I'm like, ooh, that's good. I want the dollar to weaken. I want this to be risk on. And I want to catch a high yield. I want to be a yield hog. I want to pick up the yield on the Rand. This says short. Good. And you're like, wait, that says short? I see X to A to B to C to a pink dot to a down. That means short? I'm like, yeah, you don't know how to trade a Gartley style pattern? A Fibonacci pattern? Or harmonics pattern? You don't know? Well, I already solved that. I gave you the download for free. Print it out. Put it on your wall. Okay? So anyways, cool, right? Like, super cool. Typically, we have about 5 hours of performance coaching a day, sometimes more, sometimes less. There was a live stream, 2 live streams yesterday on Sunday, and in fact, I can show you. And thank you, Maida, for hosting a get-together on Sunday. Sunday prep. Okay, so there was a Sunday prep meeting at 4. Then there was a technical trading team meeting at 7. And then this morning we did fundamentals. So that's all in the last 12 hours. 3 hours. Okay. Now let's move upcoming. Okay, so now I'm doing a live stream now. So that's 4 hours. Then at 11:30, Peter Ward is doing S&P 500 E-mini trading, right? Stock trading. So what is that? 5 hours. Jessica, after that, is doing scalping market opens. And then after that, so what is that, 6? And then after that, at 4, I'm doing technical trading team. So what is that, 7 hours today? Or in the 7 hours in a 24-hour period, we've done, we offer live performance coaching. Insane in the membrane, insane in the brain. Okay, that's pretty good, right? Yeah, that's pretty good. Happy Sunday, everybody. I hope you had a good opportunity to spend time with friends and family and unwind and clear your mind. And now it's time to get back to work. Cool, right? No, that was yesterday. All right, so awesome blossom. I guess we should start with we'll do technicals. We'll do the technicals. Let's see your sentiment. Let's do a sentiment survey. Let me put this over here. Okay, let's do a sentiment survey. Did you fill it out? Let's see. I need one more vote. There we go. We got it. Last chance. 10, 10, 10, 10, 10, 9, 9, 9. Fill out the survey. 8, 8, 8, 8, 8, 7, 7, 7. 6, 6, 6, 6, 6, 5, 5, 5, 5, 5, 4, 4, 4, 4, 3, 3, 3, 3, 2, 2, 2, 2, 1. Kick busted. Boom, ch, ha. Boom, ch, ha. Don't. Don't. All right. It takes two to make it out of sight. Hey, I'm telling you, the 90s were awesome. We had some good music. All right, what kind of week are we starting? Is it going to be an up week, a flat week, a down week? And everybody said, yep. Flat, so I guess that all means flat, volatile, sideways, wow. So, do we have an underlying intrinsic trend? No, we don't. I already did my survey, though. I surveyed millions of traders. Oh, did you know that? Would anybody like to have access to a sentiment tool that looks at millions of traders? Oh, yeah, it's
US dollar, Swiss franc technical outlook. Pullback before continuation.
So we already have that at traders.com, of course. Duh. Wonder why it does that to me. I want to rock right now. I'm Rob Bass and I came to get down. I'm not internationally known, but I'm known to rock the microphone. Because I get stupid, I mean not crazy. All right, here we go. So, looking at traders, like how are they set up to trade vol? Long-term yields, short-term yields. Looking at 1 billion contracts in the options market. Looking at yen traders, looking at dollar traders, looking at S&P 500, looking at gold. You know what's happening right now? Completely, totally opaque. Whatever you think you're doing, you're doing on your own. You may be the only one trading. You might be crossing the desert for a mirage. So, doesn't mean you don't trade. The thing is, be careful. I would immediately drop my lot size and be cautious of what I'm trading. And in fact, what I've been talking about a lot lately in our private groups is preparing for a change in direction, a reversal that has not yet reversed. Yeah. Abdul's loving it. I'm smoking hot like fire. When I turn, you desire. I'm fresh in you because you white. I ain't lying. I ain't dying. Up to number 1 is where I'm flying. Oh my God. Yeah. I'm telling you though, you know, when you listen to rap now, a lot of it is just like, you know, prostitution, drugs, crime, you know, everything is sort of promoted as heroic. But when I listened to rap back in the 90s, early 90s, it was like about life in South Central Los Angeles kind of thing. Like it wasn't, how do you say it, romanticizing. It was just the reality of it, and it was much different. And then on the East Coast, you had like Public Enemy that was, they were singing for a political change and empowerment, right? Your enemy could be your friend or guardian, right? You're like, wait, that is cool, right? And now it's just glorifying crime. And I'm like, ugh. Not all, of course. I'm overgeneralizing. The other thing I liked about the early 90s is like hip-hop was separating from rap. And so hip-hop went jazzy. And all of a sudden it was like jazz and jazz with a hip-hop beat, you know? And it was cool and classy. Right? Cool and classy. So anyways, and I don't like the glorified crime stuff. Yeah, that's not what gangster rap was about. Now it's just glorified. But whatever. Yeah, the 90s were cool, man. I loved it. Yeah. What was it, Andre 2000 or Andre 3000? You're like, oh yeah, Elon Musk's kid. All right, so anyways, let's go on with it. So something going on with Ripple. Okay, so we're caught in these ranges, really, and it's saying, like, notice if we get to 57, there'll be a breakout. So how do you handle that? If there's a breakout, you catch the next pullback. And you'll probably catch it at 56, where we are now. But we're at the top of the range. Another way to do it is it went up, and then can you see it? It came down. So you could thread that needle if you're aggressively want to own. I don't know if I'm that aggressive on Ripple, but some of you may be. But the higher high, higher low is better. Okay, but up to target. So notice the signal came out, if you want to call it a signal, the pattern. Okay, the pattern came out. And let me get a drawing tool and I'll make it pink so it stands out. The vertical line. So we were here and the arrow went to here. And I'd say we pretty much did that, right? And now we're all the way back down. So the pattern that you have here, this is what we've done. Are you going to try something like that? Well, that's not necessarily what this pattern is suggesting, because if you do that, it's a trend trade. Am I right? Of course I'm right. And is this a trend? No, not on this time frame. So what the pattern was suggesting is that you should note the range. And if there's a breakout, then you catch the pullback and then you can be long and strong, right? And so, again, it's not a signal. It's giving you a heads up, and you're like, ooh, that might be interesting. Let me move that one out of the way. You're like, okay, that might be interesting. Huh? Hoorah. All right, cool. So then we can take a look at Ethereum. Okay. And we were at the top of the channel. It's coming down to the channel. Okay, so let me zoom in for you. All I want to do is a zoom, 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 and a boom, boom. All right. So a few hours ago, right?
More from Logan. My business contacts are optimistic looking forward.
All right. So Logan, being a president of a Fed, talks to local business leaders. And Logan just said, according to them, things are looking good. Anyways. All right. So this came out a few hours ago and does not mean sell. What kind of trader sells an uptrend? Okay. Bats and pigs. Okay. Bats are broke-ass traders and pigs get slaughtered. So anyway, so what is this telling you? Well, it's an uptrend, bro. Like, obviously. And then there's a gray arrow pointing down. So that means sell, right? No. No, it does not. Who sells an uptrend? Not a professional trader. Okay, so you need to be preparing in the future to buy the dip, probably around there. And of course, if it goes lower than that, that's going to be a red flag, right? So down into here and a little turn, and then this comes back into the buy zone, and you're long and gone down to get the pippin on. Okay, so anywho, and then here's a breakdown on the hourly chart on Bitcoin, but I don't know, what do you want? Now, if you look at the longer term chart, it shows some real vulnerability. We tickled 70 again. That's some real vulnerability, don't you think? So let's go, like, we're already measuring this on the hourly, so here's the 4 hour, right? So let's open this sucker. Okay, and how do we read into this Bitcoin move? Okay, higher high, higher low, higher high, but a lower higher high, higher low, higher high. Let's just call it psych level. When it hits like a reversal pivot or a psych level, this is when you should be sensitive. Okay. Then we dropped below, below the primary trend line. That shows vulnerability. Now, we don't know the future, but we know that some of the bulls have taken profit. They left. They actually took profit up here. They're like, nah, 70 ain't going to do it. We're not going to go to 100K yet, is what they're saying. The media is talking about 100,000, but in reality, people actually bailed on that. Not bears. Bears don't sell higher highs. Broke-ass traders and pigs, sell higher highs. That's okay. Now, if we get a little lower than this, it'll be definite. If we bounce at this level, then it's probable that we end up setting up a head and shoulders here. Probable, not, Okay. Now, if it goes even further, so let's say it, let me clear that out. Let's say this neckline is broken. And I guess we'll do this in black, and I will get an arrow tool. Okay, so let's say we head down to here. That's quite obviously low, right? Okay, then what? Then you want to start looking for a change in direction. And it ends up being very similar, but one is just more obvious. The first one was 100% pullback from this high to this low. This is more than 100% pullback, so it just is like crazy obvious. So is Bitcoin going to do that? I don't know, but are you ready? Are you ready for the possibility? So, look, just burning through your charts, it takes too long. You should be able to just say, ooh, that's interesting. And then you write down the 5 things you want to look at today. Imagine you only looked at 4, maybe 5 things to trade today. Instead of just cycling through a bunch of trades, looking at different time frames. You already have an intern doing this for you. And it costs you, what does it cost? $3 a day? It costs $3 a day. Oh, it's too much, Wayne. I'm out. I'm going to tap out. Well, I suppose that's not true, right? It's $6 a day because you have to have the base membership. So, okay, it's $6 a day. It saves you hours and hours and hours of work, and it's more accurate, and it never, right? And it never makes mistakes. It never misses anything either. $6 a day. Yeah, so I don't know. What do we got going on? Gold on the short term and silver. Silver's tearing it up today, huh? Just cray. Little maybe buy a dip opportunity for crude. Although these are all short term. I kind of like to start Mondays on a higher time frame. Like Brent, for example, could open up WTI later today. Okay, so this pattern is bearish.
Euro US dollar price forecast. Pause around 1.0850 ahead of lower lows.
Ooh, see, reading out technical levels. All right. All right. It's saying if we breach this area here, bears are under extreme threat. Okay? And a bull would buy a dip.
US stocks trading marginally lower to start the new trading week.
Okay? Or a double bottom. You see? And now your RWA. Not yet, brother. But maybe tomorrow. You should already be planning out tomorrow. I mean, that's good, isn't it? Come on. Come on, give it a like. I want you to like me so bad. I want you to like me so bad. Please like me. I laugh because, it's true, but it's funny. I walk through life in a duality of I need you to love me. But the way I live my life is like, I don't give a damn. But I do. That's the thing I do. But I walk through life. I used to be a very shy person. And now I just go up to strangers and just open up a conversation. Just boom. Tell me everything you know. And people talk and I learn and I listen. I try. After talking all day, I actually try to listen. And so it's pretty funny. I don't mind being both, the duality, like, I don't give a damn, but please, right? Fashionably, what did Jules say? Fashionably sophisticated, but too cool to care. I don't know. I don't even know. But yeah, give it a like. Yeah, and also, while we're at it, I don't even have the YouTube up. It's so funny. But while you're at it, I have it up here. Please visit the Squawk Today. Use it. Like, please actually use it. It's good enough where I'm proud of this service. It's not just something cheap and thrown together. It really can replace something that cost you a lot of money. I really want it to work. I really do want it to work. I'd love to see dozens of people using this throughout the day. And all you have to do is run it. Run it or pop it like I'm doing here. It requires nothing else except speakers.
To Swiss franc price forecast corrects to near 0.8630 euro despite upbeat US dollar.
I mean, seriously, right? So please, I'd love it if we can hang out there today. I'd love to see 25 people. I mean, that's not a lot of people, right? I'd love to see 25 people hanging out, listening to the news, watching, getting real-time technical patterns, getting real-time calendar, getting real-time headlines. I think it's good. I think you'll like it. So anyways, going to gold. This is nice, yeah. Up channel with an up leg. Yeah. And, we've, TRADARS.com went bullish on gold. I think it was the 22nd of July. And definitely a slow climb.
Tech and energy sectors lead gains as semiconductors stumble.
Right? And so now we're up through the psych level of 27. We'll see if it'll climb. All right, so you heard the AI yell out, energy's up and commodities are up, but semis are down. Yeah, gotcha. Yeah. So gold and silver, right? So, like, for example, you could switch over to that and you're like, all right, give me my commodities. Do, 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 do. Do, do, do. Do, 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 do. All right. Here's your silver. And I set that up for you last week. You're welcome. I mean, done, right? Like, Oh, that's luck. Uh-huh. Yeah, you're right. Oh. Huh? Dude, seriously. Okay. What was that? The swing trading group? Does anyone remember this trade? Was it probably swing trading? Okay. We are up. What is that? 200 and I don't know, whatever. I don't care anymore. Is it 2618? No, that's 2618. We're almost up 262%. Ooh, 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 ooh. I know, right? Are you guys okay? You're not typing very much. Am I bitchy? Is that it?
MXN price prediction. Potential bull flag forming.
I'm bitchy today. Do I sound bitchy? I could be. I'm tired. Nope, just living it. Yeah. Yeah. Monster winner, chicken dinner. Well, I mean, you can't get more clear than that setup, right? Like, there's the higher high, then you fib it. There's the higher, I mean, right? Just wow, 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 wow. Yeah. Cool. So, bada bing, bada boom. Notice there's no pivots or anything like you can do. Yeah. Although, David, I like it better when you're like, Wayne's a genius. And I'm like, really? You're like, it was rocket surgery. Yeah. Yeah, you're right. Right? Yeah, it wasn't. But I am not a genius, I know. But it's like one of these things like, oh, you mean, or do you mean bitchy? Oh, yeah. Yeah, I'll take both. But yeah, the thing is, 90% of everything, in my opinion, is getting the direction. And what do amateurs tend to leave out? They're not a bull or a bear. They wing it every day. Sometimes 3 times a day they change teams. And I'm like, yeah, that's your problem. And they're like, what's my problem? The problem is you don't know you have a problem. That's your problem. Right? So it's like, if you were a bear, you might have sold the top here, or you never quite got it, or you tried here, or you did. I mean, if you waited for a pattern, right? Like some of these, there are selling opportunities, and that's fine. Okay, fine. And it wouldn't have worked out, and you would have lost a little bit of money. That's fine to me. If you were a bear and you sold up in here, which I've marked, that's perfectly fine. Perfectly fine. If you worked for me, I would not yell at you for losses. Now, there's dumb trading and there's dumb losses, but losing is not unacceptable. It shouldn't be habitual. It shouldn't be what you usually do. But losses happen. You're like, oh, you sold it off resistance? Why'd you do that? Well, I have 3 reasons why I'm bearish on silver. Oh, really? What are they? Oh, well, the Fed said this, that this other pivot point suggests that. I had a pattern on a 15. Whatever. Like, if you're logical and intelligent in the way that you design and construct your trades, and you lose, you're not going to lose very much because, well, you already analyzed it. You knew the worst case scenario. So, like, you'll never be in trouble. So I'm like, why did you take that trade? Oh, well, here's the 3 reasons. And, I had this, that, and the other thing. And And up there, I took the shot, and then I put the stop, and then it popped. And I'm like, oh, okay, so you're just wrong directionally.
US dollar starts week off calm, though resides near October's high.
And you're like, okay, so that's fine. And for the bull here, this actually isn't that great of a trade on this time frame. You probably need to see it on a better time frame. Okay. And it's, even here, it's mediocre. So it's the only thing really, in my opinion, okay, this is probably better. The only thing that I see here, in my opinion, is it never turned bearish. Someone bought a dip at the moving averages, and it went up. Right? Like, not rocket surgery. Well, not much of really anything. It's not a great trade, but it's a bullish trade. And that's all it was really, I'd call it quite a mediocre bullish trade. A better bullish trade had occurred earlier on the roll reversal. Okay, now that is a kick-ass trade. This is a follow-on, second or third trance derivative of the main move. You know, it's all right, and you like it now because it took off, but that's not what's important. And predicting that is unpredictable. It's not like I said, oh yeah, this is going to go up 261%. It's going to do it fast. No, not really. We do know where the resistance is, which means the bears helped us out on this one. The bulls simply hit bearish stop losses. Okay, so it expanded, great. And then bulls are going to take profit up here. Don't you worry about it. And then it's going to come back, and somewhere around here, we'll buy it again in the future, kicking it off the moving averages on the roll reversal, whatever. So I don't want to make too much of a thing about it, but all you had to be was a bull. All you had to be was a bull. That is 90% of everything. The rest was technical analysis. And it's you buy a dip at a moving average, you sit on it for a day or two or three, and then bears got stopped out. And, oh, great, well, I guess it went up. But not a big deal. Just how it works, right? Hang on, my phone's going crazy. All right. So, anywho, yeah, not a big deal. Just another trade. But 90% of everything is getting direction. You're a bull. Good. Shouldn't have been too complicated. Now, like here, we've been threading this needle to the upside forever. Pretty clear. Do you see all the times I say sell? Yeah, none. So going back 6 months here, not quite 6 months, 4 months we'll say. Okay, this vertical line is definitely in the business of buying dips. And if you think about trading this way, I find it's very helpful. Wayne, are you a bull on gold? Yes. So what's your strategy? Buy dips? You mean create incredibly complex patterns of Gartleys and inverse bat patterns and this, that, and I'm like, no, very much no. So if I'm a bull, my declaration to the world is I'm going to buy dips. And one way to look at it is this ribbon, which is the same as the moving averages on the other charts. And now I got some daily pivots here with some annual pivots there. And like, whatever. Again, don't make a big deal of all of that. It's a decision-making process, right? So one thing you could look at is every time a bell rings, an angel gets his wings, right? No, every time this asset touches or approaches the band, it's oversold. That's it. It's oversold. You're like, wait, it's going up. Yeah, oversold. Who's selling? The bulls. They took some profit. So who's buying? The bulls. They're re-entering. Then it goes up. Then it comes back. Buy it again. Then it went up. Then it came back. Buy it again. Hey, it's up. Good. Sweet. Guess what it'll do in the future, right? You see? And that's the job. You're like, oh, that's easy. No, what you're doing is complicated. This is not easy, but what you're doing is probably extraordinarily overconfident, complicated. Okay, you're using a $20 billion nuclear mousetrap. Okay, is it? I think it is. But you know how complicated this is? Let me show you how complicated it is. Okay? Let me show you how complicated it is. Moving average, moving average, moving average, moving average, moving average, moving average, moving average. Oh. So you're going to say then, well, Wayne, which moving averages? Well, honestly, it doesn't even matter. I couldn't, but I'll tell you what I did. But, okay? It starts with the 21 EMA and ends with a 55 EMA. It's just the 2155. But this goes back to a really great moment in FX Bootcamp history where Lucas said, hey, do you buy at the 21? Or no, I think it was when it goes to the 21, do you wait for it to touch the 55? And I'm like, whoa, 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 whoa. I don't really care about the 21 and I don't really care about the 55. It's a general zone. It's a zone. It's a buying zone. And so instead of using one moving average to represent the top and the another moving average for the bottom, I just added multiple. I'm like, hey, just buy in the bands. Just buy in the bands. Which one? I don't care. Any of them, all of them, whatever. Okay? And if it makes a lower low, okay, you got a problem. Okay? David says you can literally make a career of trading continuation patterns. I think it's safe to say, yeah, 95% of what I like to do is this. A trend trade, just a boring little trend trade, a boring little price action, boring little pivot points. They're all the same to me. The pivots are roughly the same. The moving averages are roughly the same. The roll reversals are roughly the same.
U.S. SEPT leading indicators, 0.5% versus 0.3% expected.
Richard, your stop should be below support. You're like, well, what is that? 50 pips, 30 pips? Is it the moving average? Dude, you need to figure that out. Right? It could be as much as, depending on how, usually my stop is based on how long I intend to be in the trade. A swing trade might have 150 pip stop, but I wouldn't use that on a scalp. Okay? But you could argue like, oops. Okay. Let's see if you can see this. Okay, like if you entered here, okay, well, there's support here. So you could put it there, but that's really a scalp. But it could be below this, or it could be below this congestion, right? Yeah. So your trade plan would be buy here, and if you jam it here, it's very close. So there's a reasonable chance it just takes you out and goes. Why are you so scared? You're like, well, Wayne, that's 70 pips. Well, cut your lot size in half. Now it's 35 pips in terms of dollars. But if your stop was down here instead, it would actually have to make a lower low. Now, why is this important? I want you to think about this. Why is this important? If this is an uptrend, you cannot get a lower low. It's impossible. So the only way you can get knocked out as a bull is that the market has
US
completely
dollar Swiss franc
reversed.
Test 38.2% support. Will buyers hold support? Euro Swiss franc stays below 100, 200 bar MAs.
Wow, this is cool. I'm competing with myself for mic time. Give me the spotlight, Wayne. All right. So, anywho, you want to make losing something that is improbable. Right? Losing should be improbable. Winning should be the probable outcome of the situation. No randomness, no wandering around, no oh, I got unlucky. What do you mean unlucky? Yeah. Okay. What do you mean unlucky? There's no luck. Okay. So, Lucas, the way to handle that is to take the trades on two accounts, one on your demo account, one on your live account, assuming you're trading live. Or if you have demo, just do both, do two trades, but manage not double the lot, but two individual trades and then manage them differently, right? And so with trade number one, Lucas, do what you normally do. Just enter the trade. When you do, pow, put a second one in there and manage it. Okay? So you have your stop and your target. And manage it however you see fit. Make decisions on the fly. That's perfectly fine. And number two, okay, set the stop. Set the exit, and don't manage it. And do, okay, that 100 times. And then find out who made more money. That's why I like to have it on two different accounts. It's just easier. You're like, so it's the same trade, one managed, one unmanaged. And you might find your management is good because this lost money. And it shows that the initial setup wasn't very good. And I found that to be true when I first started trading and I first started analyzing my trades. I found like I'd get a trade in late and then it would do this. Because I needed 7 reasons to get in the trade, I would make 15 to 25 pips and then it would go to crap on me. And I'd break even a lot. And then I widened my stops and then found out I should have got out at break even because and then it went down here. So I'm like, okay, holding and wider stops on a bad trade doesn't make any sense. I need to get better on the open. So I'm in earlier in a good trade, you see? And it changed the way that I looked at what I was doing. So with this advice, if you find what you're doing is the better strategy, then it means your trade planning, the trade planning is the weakness, not the jamming of the stop. Because if you lose money on the non-management side. You don't have a management issue. It might actually be a strength. You jam the stop and you avoid a loss. That might be a strength. I don't want you to kill that. See, what most amateurs do is something's not working, so they kill stuff, even the good stuff. I want you to look at this like, we don't know, Lucas, if jamming your stop is a strength or a weakness. We don't know. It feels like it's a weakness, but you're not getting the outcome you envisioned. But that's not the point, right? The point is what you're doing working? And you don't know. So there may be a disconnect between the results you want and then what you're actually doing. And you might do a lot of good things. Don't stop the good things. And amateurs just are random. All right, so we need to test, reflect, and adjust. And then test again. So again, if this loses money, you have a strategic problem, not a tactical problem. It's not jamming your stop that's the problem. Just jamming your stop is probably good. Now, if you jam your stop and you're not getting the results that you expect, but the one you're not managing is actually doing quite good, then you have a trade management issue. You're strategically good, but there's one aspect of your tacticals that needs to be adjusted. So you're not even changing your entries and stuff. We're just doing, when are you allowed to jam your stop? And we can start working on that. We can start saying, okay, you're never allowed to touch it in the first 24 hours. Try again. Do a bunch more trades, you come back, you're like, nah, it's about the same. Okay, you're not allowed to, or we can then trail it. Okay, we can trail it. So you can enter, let's say your average stop is 50 pips on a day trade that really turns into a swing trade. So we could try a trailing 50. So as you're up, your stop doesn't go to break even until you're plus 50. And for most amateurs, you're like, dude, that's a good day. Yeah, well, for us, we're professionals, right? That 50 pips is what I feed my chicks. Chicken feed. Okay, we're going for 350. We're going for 550, baby. All right, so you trail and then you let run. Or you trail and then exit. I hate trailing stops, by the way. But if you want to trail it as a way to get to break even and then kill the trail, leave the break even, and then you'll exit when you hit a target. Not when you get stopped out. Like in this case, you just throw away 50 pips. So anyways, so we got to figure out strengths and weaknesses, right, Lucas? That's all. And jamming your stop might be a strength, and I don't want you to kill it. I want you to prove quantitatively what your strengths are first. Yeah. Now it's going to take some time. You might have all winter, right? Hey, this is good, right? You got the time in the winter. So, by the time it's good, you're supposed to be tilling the field, you should have this identified. What's your strength? What's the weakness? And then if it is a stop jamming scenario, we work that out. We figure it out. We test, reflect, we test. And 1 year from now, Lucas, what you consider your weakness will now be your strength. You will know more about whatever the problem is. You'll know more about that than most people know about. I don't know anything about trading, right? You'll be the expert. Yeah, I want complete mastery, but we need data. Commanded data. Right? We need data. Yeah, you got this. Yeah, I mean, and I know all this from, having seen it myself. Seen it myself in the early days. I'm like, I need to know what I'm doing right. Yeah, it was, right? Yeah, but see, but that is arbitrary though, Hakeem. Like I know you're like a 2-to-1. That's fine. So like for example, if you're buying this dip here, then you know we'll probably get the same distance here, and this is about a 50. So yeah, you could buy it here, and your target would be here. Yeah, but that to me isn't the issue. It's when do you go to break even? When do you lock in profit? And the real answer is when a higher high, higher low, higher high has been made. Now move it to break even. On all time frames. Yeah. And you're like, well, how did you know it wasn't going to go down here? Well, that's why you have fundamental analysis and seasonality. Okay? This was not bearish. It was consolidating in a bullish move. So yeah, like, well, that's where fundamentals come in. That's where seasonality comes in. Okay? Yeah. So anywho. And you can see like this, I think we had this for a while too, this apex. Higher high, higher low, buy. Higher high, higher low, buy. Oh, no higher high. Don't buy that one. Higher high, higher low, buy. No higher high. Ooh, go cold. Okay. Higher high, higher low, buy. Higher high, higher low, buy. Okay. What if it consolidates? Okay. Wait for the moving averages. Buy it off the moving averages. Is that today? No. Okay. Cool, right? Yeah, very cool. You can add to this if you want. Boo, 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 boo. Zero lag, 21, make it a fatty. Oh, over here, make it a fatty. And then you could do insert indicators, custom, zero lag, make it a fatty, make it a bluey, and make it a 55. Okay. And then you could do like, well, let's do it again. Indicator, custom, zero lag. Okay. So if we're going to do Fibonacci, 21, 34, 55, so we need to add a 34. So we'll make that a blue because it's not red hot. It's somewhere in between. But just, I'm going to keep it 34. And the color, red, blue, fatty. Just because it's, well, it's not red. Okay. All right. What else could we add? What's the equidistance between 21 and 34? Right? So you go 34 minus 21. Is that okay? 13. So how do we want to add that? Okay, I guess you divide that by 2 to get the average, and then you add that to 21, and you get 27.5. So you can go insert indicators, custom, zero lag, make it thick, input it, 27. I don't think I can do 27.5. I'll ask it to 27.5. The midpoint, basically a midpoint moving average. Then you can do clear. You go 55 minus 34 equals 21 divided by 2 equals, plus, divided by 2 equals 10.5 plus 34. So you got yourself a 44. So you can go insert indicators, custom, zero lag, 44, blue, and did I do it? Oh, I didn't make it fatty. Okay, and it's the same idea of the other ribbons, except they're all leading. They're not lagging moving averages. They're leading moving averages. What? Now, I kind of made pivot points out of them just to show you. Actually, none of it matters. It's all gobbledygook nonsense. You know, if you're getting caught up to like, what did he type in there? Why is it a 44? You're overthinking everything. You're looking for some magic formula. I guess I'll get rid of that one. That doesn't actually matter. Buy the dip. You know what matters? Are you a bull? Yeah, buy the dip. That's all that matters, right? So look at this. I changed indicators. I changed the mathematics. I changed the science. Okay, we have these moving averages that simply say buy the dip. And this is the price range which is most favorable. You want to buy as a bull when the market is oversold. The price is cheap, but not bearish. You didn't like it in here. This got nervous time. But notice traders.com, fundamentally speaking, went bullish here, which is perfect because it went bullish after the higher high. But that's what you're supposed to be doing technically. So technically and fundamentally, no brainer. No brainer. Okay? We plotted it on our chart. I know you can't really see it here, but we even plotted it on the chart. I drew a little triangle and all that kind of stuff. But easy peasy lemon squeezy. So my point here is you can do this. What you're supposed to be doing is simplifying everything. Don't make things more complicated. You don't have to be, you don't want to outsmart the market. You're just trying to figure out when and at what price. Okay? And so this is great. This was a great opportunity to get long. Beautiful. Yeah, beautiful. Moving averages confirmed everything.
At top of range as euro remains supported by ECB's wait and see stance.
Okay. So you could buy here on the price action, or you can confirm it with the higher high, higher low, and buy it off the leading moving averages. they're predicting where the moving averages will be in the future. But can you see the possibility here? I bet you're looking at this going, ooh, I need that for the shorter time frames. Like I need a 5-8 in here. And all of a sudden, like, yeah, that's how I got here as well. There's this one if you prefer. This one's pretty cool, I think. Let me move this. Okay. Buying the ribbons. And it'll keep working until it stops. Until she just leaves you, right? You picked a fine time to leave me, Lucille. 4 hungry children and a crop in the field. How's it go? We've had some good times, lived through some bad times, but this time the hurtin' won't heal. You picked a fine time to leave me, Lucille. Yeah. Anyways, I look at this, and this is just planting crops, man. Look, just drop the seeds between the lines. For all those that like my 90 raps, there's my 80s country. Don't get me started with Randy Travis. I'll never stop. I'll sing like a canary. And yeah, very cool. So let's see what else is going on in the world of logic. So we went through quite a few of the technicals. Let me shrink this a bit. I hope you went through the COT today or over the weekend. Just sort of, it's an assumption, right? So I hope you took the opportunity to do that. Let's do some more technicals. In fact, why don't we go into the scalping tool? And, well, first of all, this is your week. Wednesday, Bank of Canada interest rate decision. Friday, German IFO. Friday, U.S. durable goods. Nothing else on the calendar matters. Oh, I know there's stuff on the calendar. It just doesn't matter. What will matter is earnings reports. Okay, so that's coming up. I hope you're using this tool more and more often. What I did here is I isolated, or I actually just removed. I just killed it, you son of a. I have to do it again. I removed all the cross pairs because I'm looking for trends. I only trade cross pairs when we're in consolidation mode. If we have a trend, I don't trade cross pairs because I have a trend. I'm gonna sell the dollar. I'm gonna sell the yen. What else? Oh well, what about pound Aussie, dude? You do you. I'm gonna go ahead and sell all the yen pairs, right? Like, again, simplify. Don't make things complicated. So I'm removing. Okay, I'm removing setups to add clarity. So anyways, I just want to show you that. So now that we're on a Monday morning, when we're looking at these things to sell, so like a Bitcoin, you have to decide whether you want to buy it or sell it. Implied volatility will never tell you when, if you should buy or sell. That's what fundamentals for. This is quantitative analysis of range over periods of time. That's updated over and over and over and over and over, like every 15 minutes. So if you were a bull in Bitcoin and you were looking to buy a dip, this zone here is good and that target there is good. Doesn't mean it'll go up, but like a pivot point, that's supportive. Having looked at what Bitcoin tends to do on Mondays this time of day, this is the maximum range it falls. So it's probably not going to fall much further. Now, it can continue falling, but this time of day and all that, it would be unusual. So if you were trying to be a bull, which has nothing to do with this page, you wanted to own Bitcoin, when do you get in? Okay? Somewhere down near 66 and a half. And then if you're a bull, of course, then you're thinking long game. This is only doing implied volatility. Okay? This is not suggesting any level of trend. So you might be thinking like this. Yeah. Cool. That's nice. Okay? It's nice. It's very nice. Okay, a lot of crypto. Okay, a lot of crypto opportunities. US dollar at the highs of the day as Treasury yields climb. Okay, so let's go to, I want to take that one out. But as we get closer to 92 on this one, I think we're going to have an interesting sort of currency wars between the ECB and the SNB. So stay tuned for that. Pig Dog, it's a good time to trade Pig Dog. And right now we are on that threshold, okay, if you wanted to be a bull, okay, we're sort of in that confluence of tends to be based on the range from this high to this low. This time of day, that's the biggest range or the normal range on average. So if it may not be likely to fall further if you're a bear. So probably not a great time to sell it, right? You would want to sell high. But what if you're a bull? Then it's fallen enough, there's been enough capitulation, and now you got to get on. And this is the difference between reacting and being prepared. So you're like, well, which one is it? I don't know. Are you a bull or a bear? How the heck would I know? Okay. And now it gives you places to enter. But also, somebody asked earlier, maybe it was Akeem. Oh, yeah. Placing a stop, half the distance of the target. Okay. But how about this, Akeem? Let's say you were a bull on pound dollar and you're watching it and it
Silver price forecast. Silver US dollar climbs above $34 on Middle East risks. US election uncertainty.
Thank you, Wayne. So anyways, Hakeem might be bullish. And then there's been a pullback, which is normal. So the question is, when do you start to buy? And based now on implied volatility of pound dollar on Mondays, this is probably a good price to start looking, right? Right around, right? The 130 handle, right? Cool. So now you start looking for bullish technical trends, patterns, right? Bullish technical patterns. But at least you're interested in this psych level. And if it produced, Hakeem, right? Then you're looking at something like this. That's the potential outcome. So where's the stop? Now you could do things like, well, half that distance. Or you could put it like, I always put it 30 pips away. I always put it 50 pips away. You can use multiple different techniques, right? But Prince, the way to use this is to say, based on the normal range of this asset, this time of day, on this day of the week, if you bought around here and you put your stop below here, it would be very unusual, quantitatively speaking. Mathematically speaking, it would be quite unusual for it to fall lower than that. Ooh. And you can use implied volatility to figure out how much of a discount in a bullish trend you need to be interested to buy. And it'll also help you place optimized stop loss placement. Okay? And then over time, okay, you can start using it to analyze when to reduce the risk. Right? So for example, if it climbed above the 4-hour high, okay, maybe you jam your stop to break even. What I like to do, and I said this before, and most of you know this, but some of you don't, I tend to try to hold on for it to make a higher high and then retest. By retest, I mean, let's do this in blue, okay? Revisit this area, generally speaking, okay, in that, the trend is my friend zone, okay? And then once it's made a higher high again, now I jam it. And you're like, well, dude, that means you sit on these for a long time. Yeah, that is true. What's my goal? Well, reduce the risk. Well, I already planned my trade. I already know the risk. I've already calculated the lot size. It's already very low risk. So then what's my number one goal? I want to stay in my trade as long as it hasn't failed. Now, look, if it's failed, it's failed. But my goal is to stay in the trade as long as possible because my trade plan is freaking good. The value created is in the quality of the trade plan. I don't want to get out. It's good. Yeah. Meanwhile, I might have been able to put some more trades on. So after 2 days, 3 days or something, if depending on the time frame, of course, I'm able to reduce the risk, and now I have all that available margin because the trade is, well, profitable. So now I have all that available margin.
Against U.S. dollar amid uncertainty over U.S. election.
I really hope you use this squawk service. Okay. Well, LU, we just call that let the winner run. Yeah, but see, you don't know when to do it and when not to do it if you don't have seasonality. And then without seasonality, you also don't know when to exit, right? So like in the day trading group last night at traders.com. Let's see. If I can, let's pull up. And which one was it? Was it Aussie? It might have been Aussie. Okay. Might have been Aussie. It might have been something else. To me, it's just sort of irrelevant. So here's a trade that has not performed yet. Yeah, so what's your future outlook? Predict the future. Don't trade the past. Predict the future. Are we going to call this a double bottom? Are we going to call this a higher high? Then, dude, trading's easy. What's the problem? Well, the problem, it's moved sideways for 2 weeks and it hasn't made you any money. Oh, that's the problem? The problem is that that's a problem. So if you bought a dip in these moving averages, just like I just showed you over and over and over again, okay, what's the probable outcome? Well, this higher high, or this higher high, or this higher high, or this higher high, or a different higher high. So you have to make decisions, right? You're like, well, you could go to the weekly target, you could go to the monthly target, you could go to the annual target, or you can go to some other target. Meanwhile, there's likely to be a pullback along the way and all that. Okay, good. Yeah, that's called knowing how to trade. All right. So two things. You have to know if this is a good time to even try. There are months when you try this and it's just a dumb idea. And then there are months where if you don't do it, that was dumb. You have to know. Well, we put all of this into charts at traders.com. Like you just
Joey's green, cautious and gradual approach to easing is appropriate.
approach. Right, you have to know when to hold it and when to fold it. That is seasonality. And so one of the things that we talked about last night in the day trading group is, these micro little opportunities to get long. And I know it's not bullish now, but the thing is, will it be bullish 2 weeks, 2 months from now? In fact, we could hold this until July 1st. It's plausible. But Ali, if all you saw was this, you're like, oh, it's consolidation, this is crap. Well, that might be true. But with seasonality, it could be 3,000 pips. So is it crap? Maybe, maybe not. But the retail trader, LE, and I think this is what you're pointing to, the retail trader that pulls out 100 pips,
Euro US dollar lower, ECB's Casimir confident in disinflation path.
Okay? The retail trader that catches this pop, makes 100 pips, they feel good. They feel good. They're like, oh my God, I made 100 pips. I killed it. I'm the world's greatest trader. Yet that's just a pissy little day trade. But to know that that might be the first leg in a 3,000 pip move.
Euro or US dollar looks likely to resume downside journey as ECB sets to cut rates further.
And that you could compound and compound and compound and compound. And by July, you have, let's say, just out of sake of argument, 24 long positions, each one at break even and rising. The first one's 3,000, then the next one's 2,800, the next one's 2,500, the next one's 2,300, the next one is 2,000. And all of a sudden, dude, it's just monster. Yeah, but that's the only way. The YouTube gurus that people watch are a false prophet. You're worshiping a gold-plated ox. It's not even real gold. It's gold-plated. Okay? You have to understand, like, if you do the math, how do you get big returns with low risk? Which you might see on YouTube, which I don't even know if it's true, but let's say it's true. What the gurus are showing you is how to make a lot of money by taking a lot of risk. And that just doesn't work. So again, when I sit down with institutional investors, I've never heard even one, not even one, that says, you know what we like? Undue risk, because it brings out massive reward. Yeah, and then 3 weeks later, you're unemployed, right? So, I've never heard one even say that. So then how do you make a lot of money with low risk? And that's what I teach you. Okay? That's what I teach you. And the only way is little trades, one at a time, with low risk. But now your strategy behind the trades, by strategy, I don't mean your technique to enter a trade. That doesn't even matter. Okay? What matters is direction and how long. So if you buy Aussie yen, after a day or two or three, you move your stop to break even, and you're in it for 6 months. You see, all of a sudden, like this risk management stuff, okay, it's important, but very quickly you can move past it, right? And what you're focused on all day, every day is, how do I get long Aussie yen? When is the next BOJ meeting? When does China report GDP and import-export data and retail sales? Like, when do we get that number? And are those, is China trying to expand? Is it stimulating the economy? Is it translating into increased demand for iron ore and coal? And you're thinking so much differently than a retail trader. And you buy it and you let it run, you jam your stop, and maybe a week later you buy another one, and a week later you buy another one, and a week later you buy another one, and a week later you buy another one. And you could just be swing trading these. But you might as well day trade them. And if you're going to day trade them, you might as well intraday trade them. And if you're going to intraday trade them, you might as well scalp them, right? But the thing is, you need to be a bull. Okay? Okay? You need to be a bull. Like when you see this, okay? You see this kind of pattern. Okay? You see the red. So we came down. Think of it this way. Okay? Down to support. Okay? This is a time to start scalping long. Up, 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 down, down, back to support. In this case, it looks like about a 618. That's when you start scalping. Not the green, before the green. Okay? And so now we're down here. So let's look at this on a smaller time frame. Okay? But recognize, I want to be a bull. Done. Strategy is done. Now, can I create a PowerPoint slide and give you 3 reasons why I want to be a bull? Sure. Do I know it's going to go up? Nobody knows if it's going to go up. But I know what I intend, and I know why I intend it. Okay. So anyway, so it went up, and it fell for 2 whole days. Now, think about that from a retail point of view. Oh, my God, it fell for 2 whole days. It's the end of the world. And to someone on a higher time frame, nothing even happened. Okay. So if you were in this zone here and you were a bull, what point do you start buying? Do you see the triple bottom, higher, high, higher, low? Okay. For those that jammed their stop, you got taken out at break even. What did I just teach you? If it's such a good trade, leave the appropriate stop where it belongs. So let's say lower than that. If I was scalping. Okay. And when we get higher than this is your first opportunity to maybe jam your stop. But really what I prefer is it kicks off of that and then I jam. Okay? So maybe the break, you jam it to here. Okay? Well, actually, that ends up being the same, right? And then maybe here you could jam it and lock in a little profit. But see, I don't like doing that. I'd rather just leave it here. And by the way, just everybody should know this, but maybe not. I need to say it. When I say jam it to break even, I mean -3 pips. If I get knocked out, I want to record it as a loss. It's not a success. I laugh at people that jam +3. That reeks and stinks of amateur. So if you have a YouTube guru that does stuff like that, they've never raised money in their life. They don't have any investors. Maybe their mom. Huh? And your mom's tennis coach. You're like, wait, what, mom? Hey, he's a pro. So anyways, I would jam my stop at -3 and say, right, head high by July. I'm planting seeds, baby. I want a season. You're like, wait, your mom's chiropractor, your mom's masseuse, your mom's golf coach, your mom's tennis pro. Like, mom. Yeah. Hey. I'm not saying, I'm just saying. But they're all investors. Yeah. But that's how I would do it if I were me, is like, move it to -3. Don't worry about it. Head high by July. July, as they say in Georgia. Yeah, head high by July. And it's only, it's not even November yet. Okay? Right? Trade all the yen till my friends get home for Christmas. Yeah, maybe for you it's end of year. Fine. Perfectly fine. Because I love that March.
US dollar off to a supportive start of the week with a small tick higher.
I love the March to July period too for yen. So if you want to go long, get out at Christmas and then buy it in February, March again. Sure. Just plan it out. But once again, going back to LU, right? Or who else? Someone else might have said it. No, maybe it was LU. It was like, I can have an intelligent conversation with you and say, yeah, you can hold it to, the end of the year, mid-December, and then buy it back in March, and then ride that out to June, July, or you can just try to stay along the whole way. It's a decision. But I know that. I can prove it. I have facts. I have all the data. I even have all the squiggly lines on charts to make it easy. But for, retail traders don't know these things, so it's impossible. So this is why it always ends up when you have newer traders that are not well informed, it always leads back to scalping. Because everything else has failed, you can't stay long enough. Your stops are too close, but then your stops are too wide, but you're not adjusting your trading during the summer. You're not adjusting your trading in the later quarters. You don't know when to hold them and when to fold them. You don't know when to hunt big game or set up rabbit traps. And it's like all you've been taught is how to use a MACD and an RSI and some sort of other indicator, and someone has taught you this is the complete package, and you find out, well, some of the time that is true, but much of the time it's not true, and you just go around and around and around in circles. You don't know your strengths, you don't know your weaknesses, and you're not trading with the market. You're somehow leading or lagging it, and, well, the pain is smaller when you have smaller lot sizes. The pain is smaller when you jam your stops. And all of a sudden you have a guru that says, you can make 22 pips worth $2,200 and it only takes you 45 minutes. False prophet. Be careful. Be careful. Because it's logical that that's not the way to build a sustainable business. Cheap and fast and easy. I don't know. Nothing in the history of mankind has ever been cheap, easy, and fast that has led to massive value creation. So like, for example, let's plug this one more time. I created this squawk for you and I give it to you for free. So for you, it's cheap. Was it cheap for me? No. Was it easy? No, not. Right? Does it create value? Well, if you don't like this one, you can pay hundreds of dollars to somebody else. So I think I'm creating value, but it wasn't cheap. It wasn't free. Nobody did it for me. Nobody told me to do it. I had to think about what
US dollar Canadian dollar runs to a new high with the broader US dollar. Extends toward high from last week.
So I had to think about what would be good for us. And then I had to spend time thinking about it and designing it in my brain. And then I had to talk to people and do research and look at competitive analysis. What are other services doing? What are other services charging? How are people using it? And then translate that back to how would TRADARS customers use it? And how do I get it? And how can we get it more affordably so it doesn't cost a lot of money? And how do I solve that challenge? And negotiate various contracts with various groups. Can I get it cheap enough? But then if I can't buy it, I'm going to have to build it. So how do I build it? What technology? Who do I talk to? Who are the teams? What kind of people do I need? Right? So now we have 2 people in different parts of the world working on this for us. And you add money and you add the technology. And it, like I said, it really, like, to get it to like read this calendar, it's like a 7-step process. You're like, oh, it just reads the calendar. It's a 7-step process using 3 different services at Amazon Web Service. Each step of the process to read the calendar, to put it over here, costs money because you have to feed the machine. So ultimately, none of it was easy. None of this was fast. None of this was cheap, but I want you to have it. And here it is. Yeah. And maybe better value than, going from this YouTube guru to some other YouTube guru. Maybe you should just hang with us, other traders here on that site. Hang with us here. Hang with us the rest of the day. You'll have the news. The charts update real time, even if you don't have a subscription. At least every 15 minutes you get a chart pattern. You got the real-time calendar, you got the real-time news, you got real-time pricing, you got real-time friends that are struggling just like you, trying to improve every day. It's a complete package and it's free. Now help me, pay it back, help me. Subscribe, like, and share it or something. I don't know. Do what all the YouTubers, social media people tell you. If that doesn't work, I'm going to put on a tank top and start dancing or something. I think that gets a lot of views, huh? Wait till you see me in a tank top. Beautiful. Yeah. Need to flash your Lambo? Yeah, well, I have too many cars. Time to
Solana price forecast. SOLI's 12% gains even as altcoin gears up for unlock this week.
So anyways, but LE, I'll tell you what, people like that they're not even interesting. Like I remember one time I did some sort of promotion, something, and I'm like, I'm going to give you something awesome, pay $1, and in 1 month it'll charge you $50, right? And I'm telling you, of 100 people, let's say, that signed up and for the get rich gimmicky signal service type crap, of the 100 that signed up, I'd say 60 to 70% of them didn't have $50 in the bank account. But they want to know how to make enough money to drive a Lambo. And so I'm like, it's not even interesting to me. Like, I don't know if I want to hang with somebody like that. I want to hang with you guys. You want to be pros. You want to build empires. You want to know more. You're thirsty and hungry for knowledge. You don't want some YouTube guru to tell you what to do. You don't want to follow a signal service. You don't want to click on a button that copy trades some guy, and you don't know even how to analyze their performance to find out that they're crappy. I analyzed 10,000 traders on copy services and couldn't even find one with basic risk-adjusted performance analysis that any institutional investor would make. There wasn't even one. So it's like, I'd rather just teach you everything I know, and I'm hungry and thirsty for more. I want to learn more. I keep challenging myself to learn more. I can get a heck of a lot better. And you're on the journey with me, with us, with this community, with this team. It's like, so if you want to hang with me, it's going to be hard work. It's going to be challenging. We're constantly trying to improve and adjusting along the way and adding more and adding more. So I want you to join and say, this is a lot. How do I get more? And everyone that wants to get rich quick and drive with a Lambo, look, you can just rent one. Just rent one. What's the big deal? Just go out and rent one. You just need what, $1,500? You can drive a Lambo for a day? What's the big deal? And then you know what you find out? It's not that good. It might be the best $1,500 you ever spent. Can you imagine spending $400,000 on a car and you find out it sucks? $400,000 on a car and you can't even drive out of your driveway. Right? Oh no. Yeah. Yeah, I drove over a pothole recently in the road. It wasn't even that big. Cracked my rim. Oh my God. You're like, what did they make this out of? Plastic? Well, my rims are light. You're like, crazy. Right? Nothing but problems. The last thing you want is an exotic car. What you should have is a fat retirement account that's just printing money with low risk. That's what gets me excited. Right? Yeah. And if that makes you excited too, let's hang. Let's be friends. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. And remember, in a half an hour, we have Peter Ward doing performance coaching on trading E-mini futures. And then Jessica's doing scalping market opens at 1. And then at 4, I'm doing day trading. Meanwhile, I'm going to be sitting over here at the TRADARS Live News Trading Squawk Box. So if you want to hang and just chit-chat or just be around, please be around. Okay? Peace on earth. May the pips be with you. May your profits be above average. Right on, Trader Ward. 30.